Hey guys, thanks for coming back and joining us here at Salty Ginger Talk. Glad to have you back. So, in today's episode, we're going to make our case for why we think that colleges and universities should no longer be tax exempt and have to pay taxes on their assets and their income. Many colleges and universities, now not all, there are some colleges that are for profit, but many colleges and universities are registered with the IRS as a 501c3, and that's a designation for an organization that is a not for profit. Now, that doesn't mean that they don't make money. It means they can't make profit and take it out of the business. They can pay themselves very healthy salaries. They can redeploy capital for things that grow the entity and grow the institution, but they can't make profit in the sense of, hey, I'm taking money out as profit for my shareholders or my owners. So these are not for profit organizations. That makes them tax exempt on things like property taxes, on things like sales taxes, on federal income tax. They pay no tax in all 50 states, despite having assets in the tens of billions of dollars in many instances. So we're going to talk about endowments later on, but there's way more than just endowments. And a lot of it has to do with the property that they own and the way they use the property that they own. So, the rationale for colleges and universities having tax exempt status is that higher education is an inherent public good. Now, I think that's still true. I'm not disputing that. When you think about the research that is done at a lot of the teaching hospitals or the science departments at various universities or the mathematics departments at various universities. Yes, agreed. Tons of public good comes out of there. Lots of those folks go on to work in government positions and increase the public good. Not disputing that for a second. But when you look at a lot of the other activities that go on, and even the way that some of these other activities that go on at colleges and universities generate profit to fund these activities, and the fact that the same activities I just referenced are in many instances used to create partnerships with public companies and to license that knowledge and those patents and discoveries that they use to generate even more revenue for the university, none of which is taxed. So, with that said, let's jump into some of the details around why we feel so strongly about this subject and why we think it needs a harder look by government entities such as the U.S. Congress, state houses and congresses, and just any government oversight. We don't think it's right that these public universities continue not to pay taxes. So let's get into it. In many instances, the institutions are the largest landholder in the areas they exist. And I will say this is a much bigger issue, at least from my perspective. It's a much bigger issue when you think about colleges and universities that are in large population centers. University of Chicago, Yale is in New Haven, Connecticut, Harvard and MIT are in Boston. If you've ever been to those campuses, they're right downtown. I live in Cleveland. Cleveland State University is right downtown. And they own a ton of land around the areas that they live. So not that they live. They own a ton of land in the areas they operate and where the institutions exist. So first, they don't pay property tax on any of that. That means that the city reviews the total needs and or price that comes in or dollar amount that comes in from property tax. And they have to factor in that on huge real estate holdings in these areas, they're receiving no tax whatsoever. So naturally what happens is that the landowners and many times homeowners that own property near these institutions actually see a higher tax rate on their property simply because the city is not generating revenue on the land that's owned by the institution because remember, they're tax exempt. So if your taxes on your property, let's just use round numbers, would have been 5,000, but the university doesn't pay any money on theirs, your taxes in that same instance could have been 3,000 if the university would have paid the tax on the real estate holdings that they own. So that just inherently seems wrong to me. Now, again, you can make the greater good argument that the university does so much good, et cetera, et cetera. I think some things are different now than they were, and this has been for decades, if not over a century, that the colleges and universities have been tax exempt. But when they were first established, one, these population centers weren't nearly as large as they were now, and two, the universities did not generate nearly as much revenue and have the endowments that they have now, and the value of their holdings was worth much less in a relative term compared to the rest of the area than they are now. So I think you have to revisit it. The other aspect of this land is what the colleges and universities are able to do with it. So Arizona State, for example, a public university. I mean, it's Arizona State. It is a public university in the state of Arizona. They actually got approval to lease out land that they owned to a for-profit hotel chain. Now, that's advantageous for a couple of reasons for the for-profit hotel chain. First, they don't have the tax component to their CAM. CAM is common area maintenance, for those that don't know a lot about commercial real estate. So in a commercial real estate lease, you not only pay the rent, but you typically have to pay a share of the common area maintenance. That's things like plowing snow, removing garbage, making sure the parking lot lights are working, make sure the roof, let's say it's a shared building and there's 4 shops in one building, the roof is maintained and taken care of. Well, if you don't have to pay, if the landowner doesn't pay tax on that and they get that common area maintenance done for free, which is the instance, in which is the case in many instances as it relates to these colleges and universities, now that entrepreneur or that business that operates there no longer has that cost. So they have an unfair competitive advantage over their for-profit partners that are doing business on land or in buildings that are owned by private owners, not tax exempt, that allows them to enjoy that benefit against their competition. Secondly, on that money that's generated, those rents that are generated, that is also not taxable because it's being paid to a 501c3 or an entity within a 501c3. So when you own real estate, a lot of times what people will do is there's a holding company, and then below that holding company, you've got a bunch of separate entities for each parcel of land that you own. That allows you to kind of split up the liability. So if you held all your real estate in one LLC and somebody slipped and fell or was hit by a car in the parking lot at one of your entities, it could expose, the rest of your entities to that liability. So most entities will form corporations or companies or entities that own just a single piece of real estate. So it's within the university system, but it's owned by a separate entity that's also owned by the university system, all of which is tax exempt. So not only are they not paying the property taxes or the real estate taxes on these, that rent money is also not taxed as well. It's absolutely tax free. And then it can be redeployed within the university to do whatever they want with it. There's also instances where this happened at Harvard, this happened at Stanford, this happened at Columbia. You've got a research and development component to your curriculum or to your institution. They do research that's government funded. So the government says, hey, we need to find a way to stop the common cold. Let's just use something easy. I know that's not what they're working on, but there probably are people working on it, but it hasn't been done yet. Let's say they figure that out. That can be then patented by the university and sold to use by publicly traded or for-profit companies. The university can collect on those patents. They can collect royalties on those patents. They can collect payments on those patents, and they don't have to pay any tax on any of those. The for-profit companies that are generating revenue from using these things can, but the institution itself or the entity within the institution that's responsible for this pays no taxes on it whatsoever. So like the whole system is set up so that anything that happens within the college or university is not taxable. And yes, is there public good that's being generated by what they do? Yes. But are they contributing back to the same public that subsidizes all of these activities? No, not at all, not a penny. So, what many colleges and universities have done is implement what they call a pilot program. That's PILOT, which is an acronym which stands for payment in lieu of taxes. So I think a lot of institutions recognize, hey, this is a bad look for us. We've got so much money coming in on this deal. We don't want to jeopardize it. So we're going to pay some small percentage of what we would normally pay in taxes, and we're going to pay that to the city to show we're good actors. So at Yale, an estimate was done because Yale actually paid, excuse me, I think it was $13 million in 2021, 2022. Well, I can't remember which year, but it was one of those years. The real estate taxes based on the tax rate for real estate where they owned land would have been $131 million. So they're paying 10% of what they would have paid in real estate taxes to try to look like a good actor when they're really getting away with murder on these taxes. And when you hear about all of the shortfalls that happen, and this is a good point for us to interject, we don't think that much of the deficit is being created by the lack of revenue collection. We think, and there's lots of data to back this up, that our problem is spending. We spend money frivolously in the government, and when it's not your money, you don't pay nearly as much attention to it as when it is your money. And so when you hear about these government programs that show a lot of waste and can't account for where all the money goes, that's because it's not their money. They're not paying as close of attention to it because it's not theirs. It's not coming out of their pocketbook. So even though we're advocating here for an additional revenue stream for government, we think the problem with deficits and with government spending is on the spending side, not on the revenue collection side. But the way this whole process is set up with colleges and universities seems inherently unfair. Another benefit that colleges and universities get because they're 501c3, because they're not for profit and they're public, they don't pay in many instances for the infrastructure maintenance and the common area maintenance that we talked about earlier. So security, landscaping and snow removal, maintenance on the power grids, maintenance on the buildings, those are all public buildings and those are taken care of by public employees. So the university doesn't pay those. It's paid by the taxpayer, who's already paying a higher property tax rate and a higher income tax rate because there's no tax revenue coming from these colleges and universities that exist in the same neighborhoods that they exist in. So when you roll all that up, it makes it, in my opinion, it makes it much more difficult to justify why these colleges and universities deserve an exempt status on their taxes that has been established for a long time. We really feel like it's time to revisit them. With now, all of that said, if that's not enough, let's look at, not every university has an endowment, but many universities have an endowment. And these endowments are worth billions of dollars. And so what an endowment is when someone donates money back to the university. So you've got alumni, you've got businesses, you've got entities that will donate money to the university. So this money comes in, they don't have to pay tax on any of it. And we're not talking about chump change here. So let's just run off the top 10 endowments for the year in 2023. So Harvard University, their endowment for 2023, $49.5 billion. The University of Texas, I mean, that's a public school system in Texas, $44.9 billion. Yale, $40.7 billion. Stanford, $36.5 billion. Princeton, $34 billion. University of California school system, $17.7 billion. Notre Dame, $16.6 billion. Columbia, $13.6 billion. MIT, $23.5 billion. University of Pennsylvania, $21 billion. So that's money that they get. They can take these endowments and do a lot of different things with them. Some of the money is earmarked specifically towards programs. But these institutions actually have money managers just like a hedge fund would on Wall Street, or just like a commercial bank would on Wall Street. And they invest these funds in the stock market. They use them to purchase revenue generating assets, and they use all that money to grow the institution, none of which is taxed. It is all tax free because these institutions are 501c3s. So when you think about it from that perspective, these institutions over a 10-year period, they would contribute hundreds of billions, if not trillions of dollars in tax revenue between the real estate holdings, the licensing of patents, the programs they have in place with for-profit businesses, and the investment income that they make off of these endowments. If they had to play by the same rules that other businesses of their size and scale are forced to play by. So it just feels inherently unfair. It feels like an antiquated system that needs to be looked at because what these institutions have grown into modern day is so much different than they were when this whole policy and process was started decades, if not centuries ago. So we don't think our problems with budgets are nearly as much have to do with the revenue that's generated as they do the spending and frivolous, what we consider frivolous spending. But it still would not hurt to generate additional revenue and ease the tax burden of the other taxpayers, the for-profit taxpayers, the ordinary citizen taxpayers that exist in these areas around these major universities. So enjoyed putting this episode together. We hope you find it useful. I think you should dig into this and take a look at just what a benefit this is to these colleges and universities, and then contrast that with how much everybody else is working to subsidize these things, and ask yourself if you think it's fair. So that's our episode for today, guys. Appreciate you coming back and checking us out. Would love to hear your thoughts in the comments on our episode and your thoughts on this topic. Don't forget to head over to our website, saltygingertalk.com. All of our podcast episodes are available there. We've got links to our other social media channels and content over there. And you can subscribe to our daily newsletter that we publish every weekday at saltygingertalk.com. So don't forget to like, subscribe, and comment on our channel on whatever platform that you consume it on. We really appreciate the support there. So everybody have a great week. Hope you found this interesting, and we will see you next time.